1,000 days of lessons for discipline, 10,000 days of lessons for mastery. Miyamoto Musashi. No one said it would be easy. What it takes, my friends, is commitment. Remember, all we're trying to do is estimate accurately whether or not the stock or ETF that we are following is going up or down. That's a binary decision. Yes or no. That's the bottom line. That's why we follow price movement. That's why we use our Heikin-Ashi candlesticks, average pace candlesticks. That's why we use trend lines. That's why we use the price percent oscillator and the derivative oscillator and our Bollinger Bands. We keep our charts simple, as Occam's razor tells us. The simpler, the better. Up to the point, as we're told by Albert Einstein, make everything as simple as possible, but not simpler. That's what we strive for here. Accuracy. 1,000 days of lessons for discipline, 10,000 days of lessons for mastery. Everything is down for the day. This is the summertime doldrums. It's what we expect in the summertime with lower volume in the market. But if you look at our weekly charts, you see how beautiful they are. Whether it's the S&P 500, whether it's the Nasdaq 100, whether it is 20-year bonds that had been going up strongly on that weekly chart all the way since October. And we look at gold, and what do we see there? Again, incredible price movements since that weekly vertical crossover. The magic of the weekly vertical crossover cannot be discounted. It is an amazing thing. Now, let's jump into these charts, see what's going on. So far, we look at the weekly chart where we've now closed out Thursday. So one more day of this candle, we see a red open box, little wick on the bottom, long wick on the top, reaching a higher high over the course of the week, 103.44 as compared to the prior week, 103.13. So just barely pushing up. We do have a red open box, which is warning. We see that the price percent oscillators, it's better than flat. It's heading up a little bit, and the derivative oscillator's heading up. Now, that's the weekly chart. We go to the 2-day, and we can see that it's weak. We have, finished up the latest full 2-day candle was a green open box candle so far. First day of this latest one is up, but when we look at the high, 103, we look at the prior high, 301, a little dyslexia there, 301 flat on currently the high, and we go back and look, 301.44 is the prior high representing Tuesday and Wednesday. So again, things are slower. Price is above the 2-day trend line, well above the weekly trend line. Derivative oscillator is not negative, but it has lost a lot of energy. And of course, as we go to the 4-hour chart, you can see how things tried to push up some in the morning and then lost it in the afternoon, down 0.49%. Touched the 2-day trend line, still well above it, but again, weakening. So we'll continue to keep our eye on things. We had things pop up, told you to pay attention after that crossover to try to find a jumping in point, and things just aren't very strong at this point for that. So again, that's why we have the 4-hour chart. That's why we pay attention and we don't just willy-nilly jump into things for no reason. We go to the Qs. What do we see there? Qs looks better than the S&P 500. Derivative oscillator gaining upward momentum. Price percent oscillator is edging up still. We look at the weekly chart for the week. It's a green open box candle reaching a higher high, 195.16 over the course of the week as opposed to 194.19. So about $1 higher as far as the high goes. Price is, of course, above that weekly trend line. Now we go to the 2-day chart. It's weakening also. Red spinning top, open box spinning top right now. First day of the latest 2-day candle. Prior candle was a nice big strong candle. Derivative oscillator lost a lot of its momentum. Still green, but just holding on. Derivative price percent oscillator heading down. And we go to that 4-hour chart. Remember, we had that crossover. Did not have a jumping in point in the morning or the afternoon. That crossover occurred in the afternoon on Wednesday. So we were looking for jumping in points in the morning, and that just did not happen and actually ended the day crossing back over, going down. So keep your eye on things, keep your powder dry. Special training in today's email for those subscribers. If you're not a subscriber, go to chartingwealth.com, sign up, and you will get the special training that we have for you today on the coming market crash. Are you ready? There is one coming. Don't know how far off it is, but there's always one coming. And you want to be ready. There's a lot of considerations, including liquidity, including understanding how to read these charts. Listen to that training. It is included in the show notes for all the subscribers. Now, let's look at what's going on as we move from stocks to bonds. We go to the 20-year bond, down 0.48% TLT, 20-year treasuries. We can see that for the prior 2 weeks down. This week, really a green, almost a doji, means lots of indecision, tending up. Derivative oscillators flipped over negative, and look, we may finish the week. We may finish the week with a weekly vertical crossover going down. We shall continue to watch, see what there is to see there. If you're a subscriber to our trend notification, you simply text to the number 33222 the word Charting Wealth, one big word, and you will be on our list. If you happen to live overseas, I'm sorry it's not available internationally, but all you have to do is listen to the comprehensive review and forecast we'll do at the close of the market on Friday. So we basically see sort of a sideways slide, but there's enough downward energy from those prior 2 weeks to potentially cause a weekly vertical crossover. We'll call that at the end of the day on Friday. We go to the 2-day chart. What do we see there? We see that this latest 2-day candle is trying to make a decently strong down candle after a prior red spinning top. Price percent oscillators heading down, and the derivative oscillator still losing some downward momentum. Again, that's just the first day of the latest 2-day candle. We go to the 4-hour chart. You can see the market was down strongly in bonds in the morning, recovered a little bit in the afternoon. 4-hour crossover going down. So we'll keep our eye on things, see what there is to see, and if there's going to be a weekly vertical crossover, it will be significant, my friends, because we have had bonds going up since October 30. The week ending October 30 of 2018. That will be significant if indeed that occurs. Tried to occur back there in May and bounced off the red signal line. That could happen again. We'll just wait and see what there is to see, but could portend strong down movement in bonds over the next several months. We'll see. What do we see happening in gold? Well, we had that weekly vertical crossover in gold all the way back on the 7th of June, and gold's done pretty well since then. What do we see happening this week? Well, price movement is right there on the weekly trend line. Price percent oscillator still heading up. Derivative oscillators losing upward momentum. We have a red open box, no wick on the bottom, a wick on the top, showing some cautionary slowing on that weekly chart. And we go from the weekly to the 2-day, first day of the latest 2-day candle after a red spinning top and a 2-day crossover going down. We have a red down candle forming with solid with a wick on the bottom. Price penetrated the weekly trend line. Of course, we don't have a 2-day trend line at this point because we just in that prior full 2-day candle, had the crossover. So again, price is losing momentum, so we'll just continue to keep our eye on gold as far as that 2-day chart goes. It is significant that it has crossed over going down because that takes us out of jumping in to an up move on gold. Remember, we have to have the weekly and the 2-day moving in the same direction. 4-hour chart, down in the morning, stronger down in the afternoon. Just isn't getting the resilience and the pop-up that we had hoped for. And since that 2-day chart's crossed over, it's taken our ability away at this time. So we'll continue to watch, see how gold shakes out, see how far down it's going to plumb until it hits a bottom. Could bounce off the weekly trend line, and look what's right next to that weekly trend line. We have the gray 50 period moving average line. That would represent Since a 4-hour chart's half day, that would represent, I like this very quick math, my friends, 25 days of movement. We'll see if indeed things will bounce off there, if either the weekly trend line or the 50-period moving average will give us any kind of floor. Let's watch, see what we see. That's where we are, my friends, as we end the day on Thursday, go into the last day of the week. Remember, the summertime trading zone will end. It will end. We will be entering the fall trading zone in a few weeks, and things will get so much better, cleaner, nicer, easier to track and trade. So stay with us. Continue to practice. We so appreciate you being with us. If you haven't purchased our book, they are available, 11th printing. And of course, I autograph all those books for everyone that we send them out to. Follow the link in your show notes if you're listening on YouTube, if you get the email, if you're listening on iTunes or one of the other audio podcasts, you'll see in your show notes a link to purchase the book. You can do that. If you happen to live overseas, for some reason Square Up does not let us clear foreign credit cards, but we have an alternative. Email us, cw@chartingwealth.com. We'll send you an invoice and get your book to you wherever you are in the world. My friends, thank you so much for being with us. Appreciate all your support and help. We're happy to bring these daily reviews 4 times a week and the weekly review and forecast once a week to you, absolutely free. Our only request is that you devote 10 to 15 minutes a day to greatness. This is not a get-rich-quick program. It is, however, hopefully a get-rich program for you. Combine what you learn here with all the other things you study. Study to show yourself approved. Practice. Do not use real money until and unless you have spent enough time, energy, developed enough of a skill set to over and over and over again do this right. And then and only then can you make up your own mind about what you want to do with your own money. We're not a stock calling service. We're an education firm. God bless from the whole team here at Charting Wealth World Headquarters.